Oil futures this morning falling to a two-year low. Let's talk about why today on Insight and Action. Here's just the latest reason as to what's pushing oil prices down. OPEC members effectively cutting prices. Saudi Arabia, we learned, is lowering its prices to Asian customers. Those are now the lowest contract prices, forward contracts, since 2008. Iran is expected to match those discounts next week, according to people close to the matter. And Nigeria, we should point out, has only sold about half of its cargoes for November. Typically, this close to November, they've sold 3/4, even 80%. So, again, only half have been sold. All right, slowing demand, that's part of the issue. As a matter of fact, if you go back and you look at oil over the past several months, you'll see there have been a number of reasons why it has made this, look at that, literally 20% decline since June. You had on the day of the high, actually, Russia and China announcing that natural gas deal going out 30 years. I know natural gas is different from oil, but it points to the fact that Russia is now one of the top 3 energy suppliers in the world, nat gas and oil combined. U.S. gasoline inventories in July rose to a 4-month high. In July, that's the driving season. That's when you should be drawing down inventories, and they weren't. Again, inventory build, slowing demand. IMF lowering its global growth forecast earlier this week, both this year and next year. And then we find out OPEC cutting prices. So that is the backdrop, and it's why this gentleman, Bill Herbert, the oil analyst at Simon, says, you got a real problem, pressure for producers. As it turns out, only 30 of the, or I should say, producers are only 30% hedged going into next year. That means they've not sold oil. So as the prices go low, all of a sudden they're very exposed. Cash flow compression is what happens as a result. And he said you're going to have some negative estimate revisions. And that is why he says if you are tempted to come in and try to buy this dip in here for the oil stocks, he says don't do it yet because revisions to estimates mean they're likely to fall lower.